We're also joined in by Sandip Agarwal of Sowilo Investment Managers to talk to us about markets. Kush, of course, still with us. Uh, Sandeep, your take, what are you doing at this point? Have you been sitting on cash? Have you started to deploy? What's the sense like, and what are you advising at this point? Give us some perspective.
Hi, good afternoon, and thanks for having me on the show. So, I'm seeing five important data, which I think is making me very, very positive in last 2, 3 days. I think that the U.S. economy. First of all, I think the strength of U.S. economy will not remain where it is. So that is a good sign, which enables the Fed to do something. Number one. Number two, I think that tariff is not such an easy thing to do. I think even President Trump has understood, and that is the reason you are seeing pause and on from him on the tariffs. So I think that he also knows that tariff will definitely nullify the impact for the purpose which they are, because tariff will make again USD stronger and the opponent's currency weak. So the whole purpose of bringing in tariff will be nullified, because the opponent will opponent's currency automatically gets devalued to that extent. And third, I believe that even now India has massively underperformed China and Europe. So there will be a lot of interest which should start coming in back to India. A lot of fraud which people were talking, I think that is behind. And I also believe that RBI's quick measures on the liquidity front, it shows that government and the central bank are working towards that. There should be the environment of investment should be good. So when I see all this, I think the worst for Indian market looks to be behind. And I firmly believe that this exercise which has happened in the market of deep correction, that will actually weed out a lot of froth valuation stocks, and the good companies will remain, and they will obviously go up more substantially higher than earlier, because now there will be less number of stock which will be chased by the same amount of money when it comes back. So, and I think at some point of time FIs will also now be exhausted, because now even US has started correcting. So the whole motivation to take out money from India is gone, and USD also going below 105 is also a good thing. So I think overall everything looks like I feel that this is the right time, and we have been feeling so for last few days. And honestly speaking, we have been deploying cash every day.
Interesting. Deploying cash daily, so positive. Just quick take with regard to metals, Kush, and Jindal Stainless in particular. What's the sense like? 6.5% higher, and do you like metals in general? Because you had Manav come in and really talk about how positive he is with regard to metals.
So, the only challenge we have is that we generally don't invest in companies and stocks where, there could be very high volatilities, and where which are very deep cyclical. So, because for us, when we are running a PMS, we get money every day, and the entry points for everyone is different. So it is very hard to be in stocks where, the volatilities are high. So we generally avoid this sector, but we do play the proxies for metals. We do play the proxies for crude. So we play proxies of commodities in our portfolio, which is little more with less beta and with similar kind of gains.
Well, okay, we need to go to Anushi, but maybe just Anushi, just 1 second. Kush Bora, quick, and then we'll do a detailed view. But are you constructive metals as well, Kush Bora?
Very constructive. Hindalco and JSW Steel are the top picks.
Sandeep, I wonder what your view is with regard to a Gensol, and what your advice would be to someone who's invested, because we're seeing consecutive downward circuits, so or lower circuits. So what's the sense like in your view?
So, we run a PMS, and I'm sorry, I will not comment on a specific stock, but let me tell you that when we go for investing in any company, so, our first screener is generally a non-pledge from promoter. So generally any stock which has pledge of promoter, it doesn't come in our filter only. So because that is our starting point, and stretched balance sheet, and these things we generally don't like. So we are okay with old economy companies, and little less growth. We are very happy with 12-13% revenue growth, and 16-17% EPS growth without much volatility for a longer period of time. So we believe that those are the companies which will be chased in bad times, and they give us very good multiples at that point of time. So we are very happy to earn less, to make less money, less returns, but we don't want this kind of, any kind of stress in our portfolios.
Okay. We're also joined in by Rajesh Palve. It's a packed house. Rajesh Palve, Access Securities, joining us on the technical side as well. Rajesh, views, thoughts with regard to how markets are behaving. Last couple of days, we're seeing a bit of a recovery. Sustainable in your view?
Good afternoon, Harsh. So, market has recovered from its oversold trajectory, and this is the third day where we are seeing, green tick in the Nifty. And looking at the recovery about 22,500, we believe that, if we sustain about 22,500, yes, this recovery can extend further and possible move we may see towards 22,700 kind of zone. That's the next level where we are focusing for Nifty. So at this juncture, we are trailing our stop loss around 22,450 to hold long position to play another 150 point up move from the current level also. Even for Bank Nifty is also, managed to cross 48,500. So that level we are closely watching. If we sustain above this level, then I think here also we may see some traction towards 48,900 to 49,000 kind of level. So at this juncture for Bank Nifty, our stop losses are placed at 48,400 to hold a long position. And this is just in pullback as market was oversold. So some recovery towards these levels we may see in the next couple of days.
Rajesh, before I come to you for picks, we'll quickly take it to Sandip. Sandip, how would you play this? We spoke about Coal India, what the bull case is, what the bear case is, and I won't ask you specifically on Coal India, but what's the way to play this next leg of rally if it were to come? In your view, is it deep value, high dividend, PSU related names, or one of those three features, or would it be through high growth? Given the fact that we're seeing a bit of a cool off with regard to bonds, seeing the repo rate being cut, how best do you play this?
So we will buy where there is value. For example, the private banks, we are seeing a lot of value on the manufacturing side, in the power transmission side, in the water treatment side, all these places, and even, some shades of PSUs where there is deep value. We are definitely, open to them, and we are playing it through them. So, we have always built our portfolio based on manufacturing theme primarily, with banking also as a proxy to economy. So we continue with that, and only thing which we have done differently is that in last few days we have, weed out some stocks which have done either quite well or where there is unnecessary diversification from the management. Those stocks we have weed out, so very small portions, but broadly we are very, very constructive, and we have been adding on wherever there is good value. And we believe that, all these stocks which are down 30-40%, majority of them are will again, see good price coming back once the numbers start improving. And I see all the reasons for numbers again start to improving once, there is some cool off in the bond yields, and there is some action by RBI, and there is some pickup in economic activity. So I think combination of all this with passage of time will make money.
Rajesh, picks for this afternoon?
Harsh, there are two picks and both are on the long side. First one is Trent. After a correction, stock has shown some bit of recovery from its recent low, and now stock is penetrating to its 20-day moving average. The kind of recovery which we are seeing on the daily chart that shows that we may see further upside momentum in Trent. So one can look to buy this stock with stop loss of 5010, upside target we are projecting towards 5200. And the second stock, that is Dr. Lal Path Lab. Here also this is the fourth day of recovery in the stock from the oversold trajectory. And the way the charts are now shaped up, we believe that here also we may see upward momentum towards 2570 to 2600. So Dr. Lal Path Lab also can be looked at to buy with stop loss of 2495.
Before I ask Kush about what to do with a Coforge, for example, or some of the other IT names which have bounced back, Sandeep, I would love to understand how important did you think that order win of 1.6 billion was for Coforge, as well as maybe for the sentiment around IT? Was it really important? Because these guys are not getting orders, question marks around whether large orders will come in, and here Coforge comes in and says that, hey, we are signing a $1.6 billion deal.
So, this kind of deal, they take the company into different trajectory. There is no doubt, because then you become eligible for participating in many large deals in future. So, of course, any company, whether it is TCS, Infosys, it is 1.5 billion plus deals are actually bigger for everyone. In fact, HP and HP services and even Accenture would like to have those kind of deals, and they do get sometimes those deals. So they are very rare. It showcases the confidence which the client has in the company. Being a tech analyst, I can say that there will be a lot of advantages in the long term because of signing of such deals. But the only mistake which people do is that they think when the news comes, they think that is a 1 year or 2 year or 3 year how the revenues will flow. Generally, in IT, I have seen that when large deal comes, the costs are upfronted and revenues and profitability come later. So we have to keep that in mind. So while some people may think that it will add big number to the revenue and profitability immediately, it generally doesn't play out in that way. Secondly, I have only one concern in the whole IT pack, that I still believe that the cost of doing business in IT is can still go up, or there could be some negative announcement on that front, which is very much possible. Although finally, because of lack of workforce in the US, those costs will again have to be bared by US customer, which is detrimental. But sentiments can get spoiled. So I think nothing has happened in IT on the announcement side. So it can come sometime. That is the biggest risk which we run in the whole sector. But this is core to the US economy. That is what I believe.
Okay. Kush Bora, after having a really smart move yesterday, a bit of a sulk today for these names. What do you do with a Coforge, a Persistent, maybe even the larger ones like HCL Tech?
You wait and watch. Who would have imagined, a big name like a TCS would actually go into an oversold territory, at least technically, and that's what has happened. So the kind of moves that you're seeing on some of these names are actually a rebound from, either deeply oversold levels or very crucial support zones. Now, while there was this, up move yesterday on something like a Coforge, not surprised to see that it was given up yesterday. I think we spoke that whoever has this should actually take this as an opportunity to exit partially, if not fully, on Coforge, right? So that's the kind of space we are in. Even the IT Nifty IT setup, the index setup is not really very encouraging. So I have my doubts around some of these names. Even if they do give you a bounce, a sustainable move or a sustainable rally on some of these might be a little elusive. So just keeping these on my radar. Nothing yet that says that some of these might perhaps start to outperform. FSL is one stock that we've discussed over the last couple of weeks, which has held its ground, but there too the momentum is missing. So just for the fact that it's not given up as much ground as most of its peers have, this stands out.
And Rajesh, any thoughts on Torrent Pharma? And since we are very close, and I know you just give us two ideas, but coupled with Torrent Pharma, if you can give us a closing strategy as well. It could well be a repeat of the stocks that you mentioned at about post 3.
So first on Torrent Pharma, stock was in correction, and after a consolidation of 4-day, stock managed to give breakout of that consolidation range. Stock managed to give breakout of its falling trend line also on the daily chart. So it's a sign of trend reversal on the stock, and looking at the volume action, looking at the open interest built up on the long side. We believe that if it's continues to hold above 3030 level, I think there is still room for further more upside towards 3100 to 3150 kind of zone in the near term perspective. So I think one can hold with 3030 as a stop loss for further more upside towards 3150. Another stocks that I like for BTSC perspective, that is global split. That stock has managed to give breakout on the near-term chart, and looking at the overall structure, we believe that here we may see further more traction towards 970, 980 kind of zone. So global split is a buy with stop loss of 925.
What's the target, Rajesh, there?
970, 980 is the target.
Okay.
Keep stop loss at 925.
Okay, 925 is the stop, viewers. 975 or 980 is the target. So about 3:2 is the risk reward here. Kush, your closing strategy?
Godrej Agrovet, we've seen smart moves on this one in the last 3-4 sessions. The volumes have spiked up, practically double of the last 20-day averages. While it's very close to that 780, 790 resistance with the kind of move that it's seen, and the relative strength. There's a good possibility that this time around might take that level out, or at the very least test it. So 799, 825 are your targets. 750 is where you place that stop loss. So Godrej Agrovet on the long side.
Okay, so those are a couple of names to keep in mind. Within pharma, Sandeep, actually, let's quickly take, Sandeep, yeah. So with regard to pharma, is there a view that you have? Is there a preference within the pharma basket that you're liking over others? And how do you look at pharma versus healthcare? Do you prefer some of the healthcare names over pharma?
No, so we like, some spaces in the pharma, particularly on the CDMO side. And we also do like the healthcare side because, healthcare is more domestic and more structural. While on the pure pharma side, we also have some dependency on the US markets and regulations. So we always run a mixed portfolio on that front. And both the spaces are looking very good. Pharma is also quite different. It also helps in maintaining the beta of the portfolio. So we generally have some portion of pharma always, and after current correction, a lot of pharma names are looking very, very attractive, and we have been actively working on them.
Kush, views with regard to an MGL, very quickly.
Well, it's testing the upper end of the range that it's been trading in. The upper end is close to the 1350, 1360 mark. Bulk of the move seems to be done. So it's more of a exit or a profit booking opportunity for anyone who's spotted from lower levels. No fresh positions recommended.
Very quickly cover a couple of stocks, but before that, we're going to look at what all to watch out for. One is Euro area retail sales for tomorrow. You have US jobless claims, which is something that we'll keenly be looking out for. ECB interest rate decision, US balance of trade, US wholesale inventory, US total vehicle sales. Just some of the other things that we'll look out for. China balance of trade is the other piece as well. Couple of financial stocks in focus. You look at a PFC, you look at an REC, you look at the moves that they've made today, on top of the moves they've made yesterday as well as earlier this week. I think Monday as well, they've made some good moves. So just look at some of those names, and within that basket, I also want to club some microfinance names. So you look at what, for example, a Credit Access is doing, along with an Ujjivan. So some of these names really moving in trade, and Credit Access came out with numbers as well. I want to quickly take a view from Sandeep. Sandeep, within the financials, plenty happening. Turnarounds within the microfinance basket. You have power financiers also doing fairly well for themselves. They've come off from those highs in terms of valuations. Constructive on any of these? Are there pockets where you're seeing value within these two spaces?
So, private sector large banks are available at such mouth-watering valuation. So why should we, go down the chart? That is the way we look at it. So, some of the microfinance and NBFCs are at very attractive valuation and good price, but our preference remains more on the private bank because they are really, really available at very good price, and they offer a portfolio of offering rather than only one single product. So we generally prefer private bank unless they become very expensive.
Okay, so that's a perspective coming in. Rajesh, your take with regard to the move on PFC, REC. We did take Kush's view yesterday, so your quick view.
Both stock now managed to cross 20-day moving average, and looking at the buying action in last couple of days, so we believe that we may see further more traction on the higher side. For REC, the immediate stop loss one can place around 406, and possible target towards 425 we may see in the near term perspective. And for PFC, one should keep stop loss towards 397, and possible target on the higher side towards 415.
Some stocks which have just zoomed in trade. One of them that catches my eye is Neogen Chemicals, because it usually doesn't move like this, but has had a big bang move in the last few minutes of trade. Pull that one up. Look at that sharp move, 10% higher for that one. So really good going. So keep an eye out for that too. Okay, we've gotten the top closing strategies from our experts for sure. We wrap it up on this leg then. And a quick thanks to our guests for joining in today. Kush Boda, Rajesh Palvia, as well as Sandip Agarwal. Thank you so much, gentlemen, all three of you, for joining in today and giving us your thoughts.